You hired your first caregiver. They start on Monday, and your first thought is, I need to add them to payroll. But payroll is not the first step because before that first paycheck is ever processed, there are several things your home care agency should already have in place. And missing one of these steps can create payroll, tax, and record keeping problems that may not show up until months later. I'm an enrolled agent with over 14 years of experience helping business owners navigate taxes, accounting, and IRS rules. And in this series, we're talking about how to pay yourself and your team the right way. In the last video, we talked about worker classification, employee, or independent contractor. Because before you pay someone, you first need to know how that worker should be classified. So let's assume you've gone through that process and you've determined this worker is an employee. What happens next? The first thing I want you to understand is this. Hiring an employee creates an employer responsibility. You are no longer simply paying someone for a service. You are now responsible for collecting certain information, setting up the employee correctly, withholding the appropriate taxes, maintaining payroll records, and making sure required tax filings and payments are handled. Now, that does not mean you need to process payroll yourself. In fact, I'm a big believer in using a reputable payroll system or payroll provider to handle the actual payroll processing. But delegating the processing does not mean you stop paying attention. That is the difference between payroll processing and payroll oversight. The software may process the payroll, but you, as the employer, still need to maintain oversight. Now, let's talk about what should happen before that first paycheck. First, make sure your business is properly set up as an employer. Your business should have an employer identification number or EIN. And depending on your state, you may also need state employer accounts for things like state income tax withholding and unemployment tax. This is where I want you to slow down because payroll software can help you process payroll, but the information you give the payroll system still needs to be correct. Your legal business name, your EIN, your state tax accounts, your filing information, your employee information. If the setup is wrong, the payroll system will process the wrong information. So before you run payroll, make sure the employer setup is correct. Next, you need to complete the employee onboarding process. For federal tax purposes, your employee should complete Form W-4. The W-4 provides the tax withholding information used by your payroll system to calculate federal income tax withholding from the employee's pay. And notice what I said. The employee provides their tax withholding information. You should not guess the filing status. You should not decide how much tax they want withheld. And you should not complete your personal tax information for them. Your employee will also need to complete Form I-9. Form I-9 is used to verify identity and authorization to work in the United States. This is not a tax form, but it's an important employment record. Now, the good news is you may not need to manage all of these with paper forms and filing cabinets. Many modern payroll systems can help simplify the onboarding process. Depending on the payroll provider you use, your employee may receive an invitation to an employee portal or mobile app. From there, they may be able to enter their personal information, direct deposit information, and tax withholding elections. Some systems may also allow the employee to complete onboarding documents electronically, and later they may be able to access their pay stubs and Forms W-2 through the same system. So use the technology available to you, but remember, payroll system is helping you collect and organize the information. You as the employer still need to make sure the required onboarding is completed and that the employee is set up correctly. And depending on your state, you may also have state withholding forms, new hire reporting, workers' compensation requirements, unemployment registration, and other state-specific requirements. And for home care agency, there may also be industry-specific licensing, background checks, or training. Those requirements can vary by state. So do not assume that completing a W-4 and an I-9 means your entire employee onboarding process is complete. Now, once the employee information is collected, you need a payroll system. Your payroll provider will calculate the employee's gross pay, federal income tax withholding, Social Security and Medicare taxes, state withholding, and other payroll taxes. It may also prepare and file certain payroll tax returns and make tax deposits on your behalf. That is the processing. But again, you as the employer still need to maintain oversight. You need to make sure the employee was entered correctly. You need to make sure the pay rate is correct. You need to make sure the hours being submitted are accurate. And you need to pay attention to payroll notices, emails, failed withdrawals, rejected filings, and tax payment problems. Because payroll software is a system. It works with the information it receives. And if the information going into that system is wrong, your payroll records can also be wrong. Now, for home care agencies, I especially want to talk about time records because caregivers may work different schedules, different clients, evenings, weekends, or changing shifts. And your payroll should be based on accurate time records, not estimates, not memory, and not a text message 3 weeks later saying, I think I worked 8 more hours. For many home care agencies, caregiver time may also be captured inside your scheduling or EVV system. Your caregivers may clock in and out through a mobile app, a telephony system, or another verification process. Whatever the system your agency uses, the hours being sent to payroll should be supported by your actual time and visit records. Because if your scheduling system says one thing, your time records say another, and payroll says something different, you now have 3 systems telling 3 different stories. That is what we want to avoid. Your timekeeping process should create a clear record of the hours your employees worked. And those records should support the wages that are eventually processed through payroll. Remember what I keep saying throughout this channel. Every number in your business should have a story. If your payroll records say a caregiver was paid for 42 hours, your records should be able to support where those 42 hours came from. That is what clean documentation looks like. And this is why I encourage business owners to create the system before the business gets busy. Because when you have one employee, you may remember everything. You remember when they started, you remember their pay rate, you remember the schedule, you remember the hours. But then one employee becomes 5 employees. Employees become 15, and suddenly you're trying to reconstruct payroll information from emails, text messages, spreadsheets, 5M scheduling reports, and memory. That is when mistakes begin to happen. So set up the system when your agency is small. Collect the employee paperwork, set up your employer accounts, choose a payroll provider, create a reliable timekeeping process, and maintain payroll records as the activity is happening, not months later, and definitely not at tax time. Now, here's one more thing I want you to understand. Using payroll software does not automatically transfer your responsibility as the employer to the software company. The IRS specifically warns employers that even when payroll duties are outsourced, the employer generally remains responsible for making sure employment tax returns are filed and employment taxes are paid. And this is something I see many business owners overlook. They say my payroll company handles that, and maybe the payroll company does. How do you know the payments were actually made? How do you know the payroll tax deposit didn't fail? How do you know a state payment wasn't rejected? How do you know the tax account doesn't have an unpaid balance? This is why payroll oversight matters. And later in this series, I'm going to show you one simple way I monitor federal payroll tax payments using EFTPS. Because you can outsource payroll processing, but you should never outsource your awareness of what is happening with your payroll taxes. So before you process that first paycheck, remember this. Classify the worker correctly, set up your employer accounts, complete the employee onboarding process, choose a reliable payroll system, create a clear timekeeping process, and maintain the records as the payroll activity is happening. Because the goal is not to simply get your employee paid. The goal is to create a payroll system that can grow with your agency and still tell a clear and accurate story. Now, we've talked about what happens when the worker is an employee. But what if you correctly classify someone as an independent contractor? How should you pay them? What paperwork should you collect? How should you track those payments? And how do you prepare for Form 1099 reporting before January arrives? That's what we're talking about in the next video. I'll see you there.